So thank you all for joining me today as we talk more about the navigating the changing San Diego real estate market. Again, there's been many twists and turns over the last year, more specifically coming up August 17th, the way that we proceed through real estate transactions for buyers and sellers in the real estate industry is definitely changing, as well as how it's going to, how it's going to be seen in insurance as well as the lending space as well. Why is this not working here? Okay. So just a little bit about myself. I want to do some introductions for the people who are here, introduce my guests as well as myself. If you don't know who I am, I'm Gary Massa with Massa Associates Real Estate Group at eXp Realty here in La Jolla. Been in real estate for almost 20 years now, a couple of years in the lending industry at the beginning of that. We've successfully helped over 500 families buy and sell real estate here in San Diego County over that period of time. That's really amounted to a little over $550 million on total sales volume. Mostly I specialize in the North County luxury markets, but I also help buyers and sellers all throughout San Diego County, as well as my investor clients. I'm also licensed in the state of Baja Sur, California, Mexico, and help my clients invest and or relocate or retire down in Cabo San Lucas. And I also help facilitate investments into multi-family apartment buildings across the United States as well. Again, we've received lots of top producer awards. Just recently was recognized by Real Trends as number 30 in San Diego County in terms of sales volume out of 1,000 different agents and teams. So that was an honor. Today, I also want to introduce briefly, and we'll go more into it, but first off, Bo Hollingsworth with Cross Country Mortgage. She's been a lender in the space for multiple decades. Wanted to bring Bo in. She's a wealth of knowledge and help us understand how these changes will impact the real estate industry or the transaction process from the lending side, and tips of how to navigate the process with different tools, loan programs, and how to help, kind of navigate getting through the changes here, right? Being more competitive. Also, a very good friend of mine, Reza Sarkosh. He's owned an insurance company up in Fresno for the last several decades as well. He's my go-to when I have any insurance questions. And as you may or may not know, the last couple of years in the insurance space has been challenging, and also, a trend in the market that, again, is not being recognized until later on in the stage of the transaction, where, we're trying to get tips and tricks on how to enter the process here when it comes to insurance as well, so we're not getting caught up in the later hours. All right. So today we're going to go over, we're not going to do a deep dive, but really just kind of touch the surface, really, explain about what's going on and how we can start making some changes and being aware of what to do moving forward in the process. But we are going to go over what's to understand about the NAR settlement, how that's impacting, how we buy and sell houses, and how it's impacting buyers or sellers, as well as our industry and the market, as well as the strategies for success. Okay, at the end, we're going to go into live Q&A. So if you do have any questions, please put them in the chat, and we'll go through them a little later on, whether that's for myself, Reza, or Bo. Okay, I need to move this really quickly. So let's touch on the NAR settlement, what's happened, and how it's impacting buyers and sellers, as well as real estate agents. So as you may or may not know or seen on the news over the last year, this is a lawsuit that's been going on for several years now. And finally, essentially, the Department of Justice has sued the National Association of Realtors for antitrust policies and practices. And NAR has recently just settled. And again, that's kind of still going back and forth as well. But coming from that, we've been basically mandated with new policies, new regulations on how we disclose, how commissions being paid, and essentially how the process is going to work going forward, and how we're able to advertise properties and all those different sorts of things. So first, let's talk about the impact on sellers in a quick little history. as you know, over the last 100 years, as you may know, the traditional way of how commissions were paid is that the listing agent or broker negotiated that fee or that commission, let's just call it the full commission, whether it was 5-6% or any variation thereof. They negotiated that directly with the seller, and then they split that commission either 50-50 or some portion thereof with the buyer's broker. So that fee for the buyer's agent was not typically coming directly out of the pocket of the buyer at the close of escrow. And so what's happening now with the changes is that the listing agent or the listing broker and the seller are going to be negotiating their commission or fee only, and they're not really necessarily going to be talking about or negotiating any fees for the buyers and or the buyer's agent. The impact for the buyers, as I mentioned, buyers now need to be aware that they most likely or they will be responsible for paying their agent's commission at the close of escrow. So it would be an additional closing cost that they would need to bring to the table as part of their down payment, other closing costs for title, escrow, lenders, insurance, etc. They also need to have a buyer's representation agreement signed in place that outlines that fee agreement in place before they see any properties. So that's right. Buyer's agents need to have an agreement in place with their clients before they even open a door to show properties. So that's a big piece of the settlement as well. Again, helping buyers or making sure buyers are made aware of of what to expect of the process going throughout, what their costs are going to be, and really taking the opportunity or giving them the opportunity to interview agents to make sure that they're working with the right one that they feel comfortable with. But that being said, it doesn't necessarily mean that the seller cannot credit the buyer through the process towards their closing costs, and the buyer can use that to offset any obligation that they have, including paying their agent commission that they've agreed to. Now, the impact on real estate agents or how the process is being worked. Again, there's multiple different disclosures that we now have. The contracts have all changed between the buyer contract and the listing contract. There's no mention of any cooperating or broker-to-broker compensation or commissions in the agreements anymore. And in fact, the MLS has now removed all of those, any fields that talks about buyer's agent's commission or compensation or concessions, right? Now, that does not necessarily mean that the sellers, again, cannot advertise a credit or a concession to the buyer directly that the buyer can use however they want to. And that only can be advertised inside of the private remarks, so public facing the public cannot see if there's any offer of any credit or anything like that. We also, again, as I mentioned, need to have our buyer's agent representation agreement in place before we show any homes. And again, that gives the buyers, it's supposed to create transparency and gives the buyers the opportunity to negotiate whatever fees that they may be signing up for, so they know what to expect when they get to the closing table. Also gives them the opportunity to interview several other agents before they make the right decision. And again, that should give them the opportunity to know that their agent is experienced and qualified for the position, and not figure that out later when they're in the middle of escrow. So let's get into the market changes and talk a little bit about the trends, and we'll get into we'll talk a little bit more about insurance right after that. So data and statistics, I wish that we had some data and or statistics of how this exactly will impact the market. And quite honestly, I think as an industry, I think we're all still trying to figure this out, how it's actually going to impact the markets in terms of pricing, in terms of how the process will move forward. But again, the effects on buyers and sellers. So there's been a lot of theory on how this will affect or impact the market in terms of pricing. Now, as well as commissions. Commissions are also believed that they will go up. If there's an agent that's offering a lot of value, they may be charging a higher amount. If they're not offering very much value, they may be charging a lower amount, right? So that will also be negotiable. But again, that impact on the price of the home, if there's no credit, or I guess the theory is that if the buyers are having to come out of pocket $10,000, $20,000, $30,000, $50,000, $100,000 in terms to cover their additional closing costs in terms of that commission, it may impact, or they may need to bring the sales price of the home down if there's no concession or credit being offered to offset that closing cost, right? And so that may end up pulling home prices down. Now, again, as we've seen coming out of COVID, we've had a shortage of the supply of houses. We've had a high demand of homes that push prices up. We've had loan rates go up, the Fed adjust rates, which kind of curb the market. We've had, it go up, it go down. Rates have gone up and gone down. So we've had a lot of ebb and flow in our markets. Now throw in here the changes and additional closing costs that we're going to have to be facing from all ends of the spectrum. But again, the impact on, with rates possibly coming down, will prices still be coming upward, as well as buyers are coming out of pocket with more closing costs? That's kind of remain to be seen of how it's actually going to start working. Now, trends in the real estate market, and as I mentioned, we've seen a lot of impact from the interest rates and how the lending side of things have happened, which is why I invited Bo here to talk more about that. But we've also seen a lot of challenges in terms of the insurance side. We've had companies leave California, which ended up, creating or making it harder to get insurance policies. Prices have gone up, and it's really impacted our markets. So, Reza, let's bring you up here. Can you give us a brief synopsis of like where we've been, what changed, and where we're at today in terms of getting insurance coverage for homes during the purchase process?
Yeah. Good morning, Gary and team, and I appreciate you guys inviting me. I'm honored to be part of your seminar. My name is Reza Sarkash. I've been in the insurance business for nearly 38 years. So when you say decades, that's correct. Yeah, almost 4 decades. So I'm currently the president of the Assured Partners of California in the Fresno area. Formerly, our agency was Sarkash Insurance. We were acquired by AP, Assured Partners. And we have been seeing some challenge in the fire market, not only in the residential, but also commercial market throughout the region for the last 2 years. And just like Gary, you mentioned, it has a lot to do with the recent fires that we've had in the last 7 years. It started off with some of the major fires, Yosemite and Santa Rosa in the wine country, and Santa Barbara, Calabasas, and the giant Big Bear fire that cost billions of dollars to some of our major national companies such as State Farm, Farmers, Allstate, Nationwide, and so forth and so on. So naturally, the carriers reached out to the Department of Insurance starting about 4 years ago, requesting rate increases to justify the claims and the losses that they had paid out. State Farm, being one of the largest insurance carrier in the country, always asked for loss ratio adjustment via rate increases through the Department of Insurance. But unfortunately, the DOI denied multiple rate increases, starting from 4.9% 4 years ago to 10% to 20%, and then ultimately they had to go up to 49%, and they kept getting denied on the rate increases. So they decided a year ago, February, to pull out of a state. And when the leader of the industry pulls out of a state, such as State Farm, there goes the rest of the state. Liberty Mutual, Nationwide, Farmers, Allstate, Travelers, everyone either left the state or tightened their writing capacity. And there was a time when we had 15 or 20 different carriers. Unfortunately, we're down to 4 carriers, 1 preferred and 3 non-standard. So right now, with our agency, we are only writing with Mercury, Pacific Coastal, Bamboo, and ultimately, if we push comes to shoves, we always send everyone to Lloyd's of London, and the final destination for all the homes will go to California Fair Plan, which is very expensive and limited coverage, and it always has to accompany with a second policy, which is a difference in condition. Some of the highlights of what the carriers are doing these days in order to write is that they're looking for newer homes. They're looking for homes that have upgrades, no shake roof. They're looking for homes that show pride of ownership. Recently, a lot of the carriers, including Liberty Mutual and Safeco, have done some aerial inspection. And if the aerial inspection shows any sort of deterioration on the roof or any portion of the house, or if there is a pond in the backyard, a fish pond, they will automatically non-renew the policy. So those are the things that they're looking for. And in fact,
I'm sorry, that's in terms of canceling policies that's happening.
And in terms of canceling policy, but not two carriers prior to releasing quote to us are going to do aerial view and inspection, and then they release the quote. So if I got a referral to do a home, even though it's not in the brush area, it's in the middle of the city next to a fire department, but if it has a pond in the backyard with trees hanging over the house, or the roof, although the roofs are tile roof, if there is a sign of moss, the green algae that we see in the roof, they will not release us a quote. So my suggestion would be to all home buyers or current homeowners to make sure that the roofs are clean from any debris, any leaves, and keep the trees 10 feet away from the house, and all the branches always be trimmed. Show pride of ownership. And if you are in the rural area and you have brush around it, clear all the brush 20 to 50 feet away. If you're in an association, ask your association president or people in charge to clean the areas around you, because if you get audited or if you get by an inspection and they show that, there is a chance of getting non-renewed. And one of the other suggestions that we've been giving to a lot of our clients, whether new or existing customers, if you are with a carrier, regardless of the name, and you get a renewal with rate increases of 12, 15, or even 29%. There are some carriers, AAA, just filed for a 39% rate increase that they're going to be granted. Don't try to shop around. If they're giving you the renewal, offering you renewal, renew with them. And in the past, they used to say, bring your home and auto and umbrella and we package it. Those days are gone. If you're offered the homeowners and you're happy with your auto insurance with XYZ carrier, stay on the auto, but get your homeowners with whoever offers you the best rate, and without any changes in your, changing your roof, or you have to, make a lot of modification to your home. So that's where we stand in the California. Now, if you are you're a buyer and you're going to buy a home, there's always some things that you want to look for. Like I mentioned, if they're older homes, the electric panels is something they look for. And then if you can come up with the documented upgrades on the home, that is a plus. Okay. The carriers they ask to see when was the last time the plumbing, the electrical, the roof was upgraded. So make sure if you can come up with that and document it, it'll be easier in the underwriting.
Okay. Reza, let me ask you a question when it comes to the bill that came out that was passed for the defensible space, right? And as right now during the process, when it first came out, it was required that the sellers had the inspection by the fire department and came up with a certification that it basically passed the defensible space regulations, right? Or it's in compliance. Now that's been changed to where that can be deferred. The buyer can take that on and then, have it inspected and brought into compliance within 1 year after the closing. Are insurance carriers starting to require that certification or that compliance statement upfront to get insurance, or how is that being looked at?
Depending on the insurance companies, they're not asking for that, but they're asking for if the roof on their aerial inspection shows a sign of deterioration or some sort of a mildew, or they ask for a 5-year roof inspection certification. On the very, very seldom cases, I came across a home in the rural area that there was no fire department within 4 miles of radius and no fire hydrant. The carrier asked for a very unique report. Fire departments drill of how they will handle if that house was to burn down. That's how tricky has become. So we had to call the fire department, and that, which is about 5 miles away, have the captain write a report. How would they handle if this 11,000 square feet house was caught on fire? Right. Okay, and it was very annoying, but not on a smaller home in the city. Basically, if the roof is so they ask for a roof certification.
Okay, so just to kind of summarize that, I guess it sounds like if you're a seller and you're getting your home ready to sell, make sure to clear brush away from the roof, or like if there's trees, maybe even power wash the moss off of the top of the roof, be prepared for the aerial inspections, and prepare your list of improvements for the plumbing, electrical, that sort of thing, to be able to be provided, to give the buyers a better opportunity to get insurance, right? And maybe even go through and do that defensible space certification ahead of time, just so you have all that available, making your home more attainable to get insurance throughout the process. Is that right?
Yes, I totally agree, especially if you have lots of trees around the premises, perimeters of the house. You want to trim all this, anything close to the building. They don't like that, you know. And if you have tile roof, making sure that you have those covers that will stop the fire going into the attic, you know, the fireproof gaps that covers all that. Those are all important. Keep all the trees, all the branches away, and if you are in the brush area, clean all the brush. You know, show pride of ownership when you're selling your home, because the underwriting department looks for things like that.
Okay. These are all really great tips, Reza. I appreciate that. I mean, again, as I've told you, I've had quite a few transactions fall apart because of the fire zones or insurability or random stuff that's come up. And so getting in front of it, I think, is really important. All right. So kind of to wrap up a few key strategies for sellers and how it relates with, what we're talking about with all the changes coming up in the market. Now, again, preparing the home, I guess we'll get into that in staging, but pricing is always still going to be very important. Now, when we talk about, or when we have to have the conversation with the sellers of preparing them for the opportunity that the buyers may be requesting some sort of heavy concession, that may range in the tune of 1, 2, 3, I don't know, 4%. What the buyers can ask for whatever they want, essentially, in terms of the credit, right, that they're asking the sellers for. So pricing your home appropriately, if the seller's not going to offer any sort of concession, they may need to take that in consideration and maybe price it just below the market or as very attractively to attract the different buyers, right? Also, again, if they're offering concessions or they're offering different things that's going to attract the buyer's agents or more eyes on the property, they may be able to price it a little bit higher. But again, keeping in mind what the market's actually doing as we hit those ebb and flows, because the market changes from month to month. It might be really slow one month. The next month, we get a little stimulus from lower interest rates, and all of a sudden properties are being bid up again. Staging, again, going back to what Reza was saying, is very important in terms of like preparing the home for sale. I've found right now that, the market's been a little flat over the last couple of weeks, and buyers have been very picky. They're having to come out of their pocket with a lot of extra money. And so if a property needs quite a bit of work, they are applying a much lower purchase price for it, or it's just sitting there. The homes that we found are staged, model looking homes, look like they're well cared for, are selling quicker and for more money. Now, marketing again is always really important, but not only are we marketing properties to other buyers agents, but we're also marketing the property to the buyer pool, both internationally as well as locally, but using all of your channels that you possibly can through your network, using your lender, using your insurance advisor, all of your different partners in helping you to market that property, get as many eyeballs on it as possible, and utilizing all the different services, the MLS, the internet, video, etc. These are all really important in getting your property out into the market and having the best opportunity to attract those different buyers. Okay. Strategies for buyers. Now, again, navigating the new commission structure. Buyers really need to start to understand that they may be put in a position later on, even though they've negotiated, or when they've negotiated that commission price with their agent up front, that the seller may not be offering concession for that, and they need to be prepared to pay the commission to their agent that they've negotiated up front. The agent does have the opportunity, if the seller's not going to pay any concession and the buyer doesn't have the money, the agent has the opportunity to basically cancel that deal or walk away from it. And that might put buyers in a very challenged position. From what I understand, there's now a box in our representation agreement that also has the buyer certify and confirm that they have the funds available to actually make that commission payment. So in as much as it's important to get pre-approved, and we'll talk about that in a minute, but make sure you have all of your financing, closing costs, etc. up front. Don't just kick that can down the road. Identifying the right agent, whether it's me, whether it's any other agent, the important piece is right now is to make sure that you're interviewing agents and understand their experience, their negotiation ability, their marketing ability, and how they've gotten through tough times. You have the opportunity to interview multiple agents at this point before deciding on one. You might decide you want to pay very little in terms of commission, and the service that you get might reflect that. You might decide you want the best agent possible, and the fee for that might reflect that type of service level. But the point is that it is more important now more than ever to have the agent that knows how to navigate through this process and knows how to negotiate to get your closing costs paid for, to reduce those out-of-pocket expenses at the closing table, and also negotiate the price of the home, the terms, etc. And so, as far as financing options, again, the market has become very competitive. There's been a lot of different lending programs that have come out to help facilitate creating more being able to be competitive in the market. There's also a lot of regulations, or I guess we'll call them guidelines, Bo, that's been tightened up. That's challenged people getting credit. So being able to find the right lender that can offer you options for your right scenario, whether you're, W-2 employee or you own your own business, there's a lot of different ins and outs that you need to understand. But getting approved for the right loan that fits you up front, well ahead of times, and understanding how all the closing costs are going to play into that is now more important than ever. So with that piece, I'd like to bring up Bo. And again, thank you for your patience, Bo, and being here with us today. Again, you've been in lending for quite a while. Please give us a quick background of who you are, and we'll jump into some of the questions.
Okay, I think somebody's on not muted.
I can mute them real quick. Got it.
Hi. Okay, so I'm Bo Hollingsworth, and I've been in the lending arena here since 2000. So I've got a little background going on with originating, subprime, secondary, underwriting, you name it. We have a pretty big team that backs, and just knowing it's really just harnessing what today's market is and looking at it as really an honor to be able to serve people, and who you're working with really does matter. And so this whole change in our environment, as well as the products from when we had 2008 versus today, it's just another level of where products and, sales and financing and what bucket to use based on that to fit in today's environment on, it's just the way they're pre-qualified up front, right?
Right.
So thinking about the insurance, and thank you for sharing, Reza, and Gary as well. I mean, what it comes down to is we have one client and we're a team of multiple people, right? The appraiser, the realtor, the insurance provider, the title, the escrow, the lender, and then the consumer who's trusting all of us to take care of their needs. So what does that look like up front? And what changes have we made in the environment on the lending side to be able to facilitate and service the hard part that comes to you guys with those questions or concerns, right? So I think the first thing our team started working on about 7 months ago is how to change our pre-approval process in regards to consumers wanting to go in and purchase a property in whatever price point, and also allowing the additional funds to set aside to pay the buyer's agent, right, for the services they can get. And I know the difficulty, whether you have been doing real estate for 30 years versus 24 months or 6 months and you just got licensed. I think the hardest thing for anyone to do, based on maybe not being educated on, is asking for payment, right, for your services and what that truly does entail. So being experienced, Gary, and this is why I love working with savvy realtors in our environment, not only in California, but across all 50 states where our branch is licensed too. It makes a difference. It makes a difference on coming in the traditional 20% down, 80% loan amount based on the rates, what we can give as a lender credit, how we can help with fees, how we can offset those costs, and then really educating the entire consumer market on purchases, on what they can do to bring in today and how they can save that extra money for the down payment that they were going to provide, and provide it to the realtor to find them the right home, right? And if they can do that, we show them and educate them up front that absolutely 100% it's worth that, because what you're going to get based on a savvy realtor or a new realtor on experience and marketplace and what you know in your direct community is everything, right? If I would 100% pay a buyer's agent for sure to make sure I'm walking into a home that is going to allow me an equity build. I know that I'm making 6 payments right now based on current market, but I'm working with a good lender that knows that we can do buy now, refi later with credit costs given back to me. These are the things they're walked through. So it's never rate up or down. It's really about budget and the different buckets of money. And what we did 6 to 9 months, I'm going to say 8 months ago, is start working on, hey, here's your pre-approval. Here's your buckets of money. Here's what happens. This is what I suggest in a current economy, right? On rates being higher, products being a little bit wider to facilitate, just like in subprime, they came up with more products back in 2008. So you don't just sit there and not know what to do. Credit risk, credit scores are allowed to come in lower. Down payments are allowed to come in lower, up to 3 million. There's all these different products, and I'll jump into that in just a few. But I think truly what it comes down to with this entire agreement, right? And what does that mean? Nothing changes for me or our team on how we've done things for the last 2.5 decades.
Right.
We serve people and we're willing to serve people, period. Right.
So, Bo, let me ask you a quick question. And you talked about the, trying to free up additional funds for whether it's closing costs, paying your agent, et cetera, from down payment, or identifying the buckets of money, which I think is really important, as opposed to just saying, here's all the money you need to come up with, not what you have to work with, right? I think that's a really good point. But we also, we also talked about what that credit or concession percentage can be. Now, traditionally, it's been, the lender would only allow credits to pass through up to 3% of the purchase price. Now, has that changed at all, or do you see that changing to allow more of a percentage of purchase price to be credited from the seller to not only offset the closing costs and or repairs and the agent commission?
Okay, so two questions, lender and seller. Is that what you're asking, or do you want to deal with lender credit first?
The lender credit from the seller. Like if they negotiate credit through the negotiation, how much can they pass through? Has those percentages changed?
Okay, so we can't credit more than closed costs on the actual transaction period, right? And you have to, it doesn't matter if it could be anywhere for interested parties are anywhere between 2% and 9% on Fannie Mae, right? So that whole 6% thing is kind of just a myth. You can charge what you're worth. The reality is, if I have a credit, how do we use those credits from the seller to offset a buyer's debt or go towards closing costs? They still will have to come in with their own funds on down payment only. Right. And that's really the rule, right? Is not crediting them too much and obviously not charging them ridiculous fees where they're out of compliance. And that's a ratio that comes in with loan amount, and it changes and varies upon product, right? When I say product, I'm like 300,000 versus $1.5 million, $2 million. There's a big difference and variance of how much can be credited to offset for the buyer.
Right. So the buyer's agent commission is still being looked at as a closing cost. So again, they can credit all of their closing costs, essentially, whether it's 2, 3, 4, 10% of the transaction sales price.
Yep, the buyer can come in, and now here's what happens with the buyer's agent, right? Things happen during a transaction. It's not only that, but then on the seller side, you've got repairs, you've got all staging, you've got all these different factors in, and you have an agreement of X. So I think what it comes down to is a really good negotiation in the beginning of that transaction between the agents, and an education curve that needs to be told to the buyer and the sellers.
Right.
And I think that's what we're lacking the most. And I think those that are actually treating this as educating and serving will not have a problem with any of this stuff.
I agree. So last question, do you feel that, or do you see any appraisal issues coming up with those terms of those credits from the seller versus the purchase price of the home?
So the appraisal is supposed to be appraised based on current market value, not with the ups and downs of what the price point is going to be based on closing cost period, right? So what's going to happen is when you go in and you negotiate the lower price, most likely it'll come in no matter what. And when you're looking at current market, once these rates do decrease just slightly, I mean, you heard what happened this week. We got an uptick, just like that. Well, it's already corrected worse than what it was on Friday, but that's not what the news is saying, right? So the good news is, we make those changes and know of those things happening 2 weeks prior to it happening, so we can take care of our borrowers that come in and make sure they're put in the best price point. But to answer your question, I think it all goes within the negotiation, right? Of how much is going to be there. So for instance, a lot of closing costs can be predicated to two things. Maybe it makes sense to allow them to have a buy down for their first year. There's a set, right? The other part is maybe they don't need it once the appraisal comes in. So there's a lot of negotiations to leave you room to allow for all several ways that these fees can be credited for the right reasons.
Right.
An example, I'm going to list my house at $1 million, right? I probably can get in a traditional market 1-1, right? Why don't I list it for 1-1, give 3 points to the buyer to close, and still net what I typically would net anyway, at 1,516. So these are all the things. Now, if the appraisal comes in lower, that's negotiation. Do they want to lower the purchase price and everybody still wins? There's just ways for it to be educated per buyer and per seller on making it a really fair deal. And it truly comes down to who you work with matters as a team, not just one-on-one.
Well, and again, as you mentioned, how like the lender or your agent or your insurance broker of how to pivot, you know, at that crucial point in time that you had a plan, something's changed, either there's an opportunity or a challenge, and being able to understand how to, you know, reassemble the transaction, if you will, to make it work out in the consumer's favor, in the buyer's favor.
Well, and I think that at least our teams are working very diligently with each buyer uniquely. And like, you know, Riza said, we go ahead and get a quote from 3 insurance providers based on the actual property that they're going to go look at. So they know the range, because we found hiccups that come in, and Riza, I didn't hear you mention this, is if the seller had prior claims, they can't get traditional insurance, which goes ahead and create a very, very large insurance bill that they no longer fit in the ratios.
Right.
So it doesn't mean they can't buy that home. It means we have to change a product and educate them that maybe we do a no ratio purchase. So it's just the law of the land. And, you know, our job is to mitigate all the risks we possibly can, and truly take care of our consumers, both seller and buyer.
That's right. All really good points. Okay, Bo, thank you so much for all of that insight. Again, if there's other questions for both Bo or Reza or myself, please feel free to put them in the chat. We'd like to go over those shortly and or be able to contact them later on for, you know, for any more specific questions. So, okay, that brings us to our Q&A section of today. We've gone just about 45 minutes. And let me bring up the chat bot here. Oh. Okay. I don't see any specific questions here. So, okay, Sophie, are you able to drop Bo and Reza's contact information in the chat for everybody to see, to be able to get that and contact them afterwards if they'd like? And I'm going to go ahead and wrap this up. I mean, the whole point of today was really just to create awareness, try to really, you know, navigate through some of the myths and, you know, some of the truths and some of the myths, right? We've had a lot of changes as this has all evolved over the last several weeks. The point is it's going into effect the 17th of August, and realistically the MLSs are starting to remove their fields even the beginning of next week, a few days ahead of times, and all of our contracts have already been changed. Every broker seems to have a slightly different, you know, either I don't want to say requirements, but it's a slightly different viewpoint. They're all handling things a little bit differently. So again, we're going to see a lot of different perspectives here as agents are talking to buyers or talking to sellers on how things will be done. The good news is, like, we've navigated through COVID, through the mortgage meltdown crisis of 2008. There's been several markets that has really fundamentally changed our industry and how we've done business. And we've all got through it before. And so the point is that it's just going to take a little bit of time for all of us to wrap our heads around it, find the best practices. But the real idea here is to make sure that we're doing all of this in the best interest of the consumer, the buyer, or the seller in the process. And so building your team around this process of those who have your best interests in mind are incredibly important, but also the people in the team that can help explain this and help you through all the changing landscape. There's going to be a lot of pushback, I think, from buyers and sellers as well, because again, the information isn't very clear that's out there. The news is reporting one thing, but it's actually happening in a completely different way, or it's already changed by the time that they're reporting it. So please find the people that you trust, ask questions, and make sure to do all of as much legwork as you possibly can up front So you enjoy the process. You're not getting to the end and stressing out. You can't get an insurance policy, or the loan doesn't work out, at the very end. Those are all really detrimental and like super emotional time periods to have to learn that information. This should be a fun process, whether you're buying or selling. The moving process, I know moving is not ever fun, but again, the transition process is fun and it should be enjoyable. You're creating memories. So again, just do the work up front, reach out to people who you trust and get the right information. So again, thank you everybody who's joined us today. And thank you, Reza. Thank you, Bo. I really appreciate you being here today and sharing your years of wisdom. Again, everybody reach out if you do have some questions. Thanks again for joining me. We're going to sign off.